Alberto, I'm going to give you an open question. Your span is so wide. What part of the EU bond market interests you most right now? Where's the greatest opportunity?
There's been a big rebound in bonds and also in particular in high-yield bonds globally, in the US, in emerging markets, because essentially what the market is saying is you're in Goldilocks. You have a dovish Fed and you have growth still around trend or slightly above trend. In Europe, on the other hand, the market is still very fearful because of Brexit, because of the Italian budget, and also because of the recent data showing Germany and Italy are in a technical recession. They had a quarter of zero or negative growth. So in Europe, you can make money from the pricing out of these recession risks if Europe gets out and there is a rebound,
right.
Even not a strong one. And we think this will happen because China is about to stimulate, and we have also a better news with between China and the US, and Europe is very sensitive to Asia.
Right. Alberto, I want to speak about my conversation with Bill Gross that we had a few days ago. Mr. Gross was quite blunt about his unconstrained failures at Janus Henderson, about having almost a hedge fund-like bond portfolio versus his demonstrative success in total return years ago at PIMCO. Can you run a more narrow bond portfolio, as Mr. Gross attempted to do, or do you just have to go more diversified, more on prospectus and away from an ad hoc shop?
We're very focused on credit. We use a macro overlay to hedge macro risks, but eventually, yeah, you have to have a directional bias. We believe that you need to be either long or short the market. It is very hard to perform if you're always long short in this environment, especially given that central banks have reduced the volatility of assets across the world. So there's sometimes very few moving parts, and either the market moves all the way down or all the way up. So we believe in a directional approach.
Alberto, we've talked about volatility coming back a little bit at the start of this year and also the end of the last, but I also know that you've talked about QE infinity, which seems to be how we're setting off on 2019 with the Fed on pause, not really any prospects for the ECB to normalise this year, according to many people, and then look at where the BOJ is as well, the 10-year JGB yield in negative territory today. Against that backdrop, do you realistically see a pickup in volatility this year, or is volatility going to stay subdued with QE infinity?
So first of all, we think there's no recession this year or next year. This was a fear that was widely discussed by a lot of people, and as you know, economists tend to predict nine out of the 5 next recessions. So we think there's no recession in the next 18 months. Now, this gives you an opportunity to bet on the pricing out of these risks. It's happened in the U.S. market. It's happened in EM, thanks also to the Federal Reserve. In Europe, you still have some fears of a hard Brexit impacting the economy and you know, Germany in a technical recession. But the global cycle helps Europe. Europe is a very open economy, so you shouldn't have...
Where's the opportunity strongest to price out those recession risks? Is it in Europe, or is it actually in the US?
Today is in the UK and in Spain and some other periphery countries which haven't rebounded. And we know Spain is still growing. For example, the UK is still growing, even though there is fears of hard Brexit. You know, without going into the riskiest periphery countries, there are still very high yields in these instruments. If you look at banks, you have global banks in Spain giving 8-9% premium over bonds versus very risky emerging market countries that give you less.
Oh, come on, Alberto, this is your wheelhouse. It's right where I wanted to go. What is Algebris doing on the banks? I mean, you guys have a heritage on the EU banks. Is it the mother of all opportunities? And if it is, give us some choices there.
We think Europe credit is interesting, is attractive. I mean, we are at the widest premium for European high-yield companies and also banks versus U.S. and versus emerging markets. So we look at the large cap banks, the systemic institutions, and in credit, betting on the solvency of these banks, we think it's a very safe bet. We had pretty good results across the large Italian and Spanish banks over the last quarters.
You didn't mention German banks. Come on, Alberto. Everybody wants to know what you're going to do with Deutsche Bank, Commerzbank, and the alternatives in Germany.
Yeah, no, we're not exposed because the German banking system is still very fragile and it needs more profitability. So the problem with Deutsche Bank is that the local savings banks in Germany, the Sparkassen, are lend at very cheap levels. They're supported by the government, and therefore the retail, the home base, the home market for Deutsche Bank is unprofitable. So when you had UK banks coming back to become more of a retail house, more of a private bank house like RBS, they had a profitable market to retreat to. That doesn't happen with Deutsche Bank. But it's a problem that can be solved, and the rest of the space is still reasonably okay. So compared to the risks that are priced in the market.
Right. See, Nehra, how I crowbarred that out of Alberto. He didn't really want to talk about the German banks, but we got it out. We got it out of him, didn't we?
Yeah, great job, Tom. And I'm going to crowbar something in too on Italy, because, of course, I spoke exclusively to Carlo Messina, the CEO of Intesa, earlier. And, you know, we had a column on Bloomberg talking about how Intesa kind of stands out of the Italian banks. Alberto pushing on with the cleanup, giving a big promise on dividends as well. Are Italian banks something that you'd look at an opportunity, if not in aggregate, maybe individual ones like Intesa?
If you take the national champions, like for Spain, even in Italy, you have very wide valuations, so both in equity, but in credit especially. So you have these banks which are compared to the government, compared to the risks that the country has, but in reality they're very diversified. UniCredit is only half an Italian bank. It's a European bank for the other half. Intesa makes most of its money from asset management rather than lending. So you really have a mispricing there where investors, compare the risk of these banks with the risk of the country, but you have a lot more diversification. And from a capital level, they're very robust. So you could argue that maybe Europe will not rebound as strongly as China or the US in terms of growth. But for these credits to be okay, you just need growth to be positive, to be around trend. You don't need a very strong rebound. So the pricing out of recession risks in Europe is a big opportunity, and that's why we still like European credit. Perhaps we were a little bit early in calling it a long last year, but we're seeing that this year it's starting to perform, and we think there's more to go.